markers, okay? Let's get through these markers to understand how we're looking for these trades, okay? So the next one is the previous high-low marker. What is that? That is the marker from yesterday's high-low projected onto today's chart. It's a light blue tracer. Why is that important? Well, plots as a blue tracer on the chart. Since we know market makers trap the volume at the high and low of the day, it's significant to know how they act next to these levels the following day. These levels often line up with other strong support and resistance lines or zones. What am I talking about? How about a light blue tracer, M1 and ADR low? They line up together. We know that market makers are going to go near that level, throw the needle on the other side of it, and come right back to trigger the stops and the traders that trade the breakout on the other side. So this is another piece to the puzzle to help you form up an idea of where the strike zones will occur. Here's an example of a W forming right out of the U.S. session, right? Level 3, there was 3 levels of drop overnight. We're at level 3 behavior. Perhaps this is the midweek reversal. Why? Because it's taking the low from yesterday. It comes back near it. This candle right here that throws the spike right past the low. You guys know the answer to this. Validates the pattern, absorb the breakout traders, absorb all the pending orders sitting on the other side, soak them all in, and then pull the market away. Anybody that went short here is stopped out here. Anybody that went long here is stopped out here. So now, we know that we have the red box, yesterday's low. The needle is thrown past yesterday's low and closes above. The reversal is imminent. It is a confirmation that we are on the right side of the trade. Okay. M formation high, mayonnaise, and yesterday's high happens to be lining up. Price comes out, 3 swipes to the high, just misses yesterday's high. Why? It doesn't want to repeat the level to release the traders that it trapped from the previous day. In this example, they didn't need to trigger the stops or the pendings. They had them already. So they repeated the level but didn't break it. When they just miss yesterday's high or low, that tells you again, hey, I'm on the right side of the trade. Now, we have yesterday's low, an ADR marker, and a pivot. They all just happen to be lining up together. Strike zone, where price will come in and possibly make the low. Okay, something happened to my mic for a second. I'm back. All right. Once the volume is trapped, market makers will not cross that level again. The current day's high-low will come near it, but not take it out. Market makers will throw a spike right to it, but close away from it. The spread keeps you trapped. This will most often occur around London Open. Excuse me for a second. Hey, give me a second. I'm having a coughing fit. Like. Okay, let's see if I'm good. All right, can everybody hear me again? Sorry. Yeah, it probably is too much Diet Coke. All right, so we understand that they worked yesterday's high and low as a possibility of grabbing traders that have placed their pendings on the other side. Once the volume is trapped, it's to their advantage to not cross that level again unless there's too much money sitting there. So we could see how they handle yesterday's high and low to give us an idea if we're on the right side of the trade. Okay, now, the ADR high and low, always plotted as an oscillator, right? To me, I can't read that damn thing as an oscillator. It offers little to no value in this format. So I had a coder take this and take these values and plot them on the chart. So we took the values as plotted on the subgraph, converted them to a hard target on the chart. Now when these values are hit, we can make solid trade decisions. They appear as a light orange tracer on your chart, and when they are hit, they turn solid red. I didn't invent ADR. It stands for average daily range. But we understand that market makers have a limited amount of pips that they have to distribute during the course of the day. So following ADR or plotting the average daily range that a pair moves gives us the reversal zones and the hard targets on the chart where it might make these moves, M's or W's. Another part of the puzzle to help you understand. The ADR, or the high or low, right, is the best support and resistance there is intraday. Sometimes they line up with a pivot, and it lets you know where you are in the move. So what type of trade might be warranted? If you break outside the ADR high and you see 3 levels, you better not be long or short. You better be in the reversal mode. You better be realizing that the trade is about coming to an end and that I am in a different part of the cycle. I'm exiting my position I was in, and I'm looking for the reversal. Once the trade is on, these act as a target. Now understand that that thing is moving. It takes the open at 5 or 6 o'clock and plots the possible projection up or down. And as the trade adjusts, so does it. But when the adjustment lines up with other things, mayonnaise, M1, M2, yesterday's high-low, when those things line up, it gives you a possible range or area where the low or high might be formed. And that's what we're trying to do here. The whole business and the whole way that I teach you or want you to learn this business is to learn how to pick the high and low, which everyone out there says is impossible to do, right? We took these indicators and plotted them on the chart to help give us an idea of a strike zone of where the high and low might be formed. If you can pick the high and low already and this stuff is troubling you, throw it out. But if you're struggling to pick the high and low, these zones or confluence zones that are coming together are going to give you an idea of where that high or low may form. That's what this is about. So, we have yesterday's low and the ADR marker line up. That's a magnet. Price is going there. It's going to come out of that Asian range, hit the stops low, and go right to that and start the W. That gives you an idea of where the low might be formed today. Yesterday's high-low, a pivot point, and the ADR marker will create a strong intraday reversal zone, especially if there's a water or a jar of mayonnaise sitting on them. When those things line up together, it is a very good area where the stop hunt will stop. It will run down to that level as a stop hunt, trigger the traders on either side of the mayonnaise or the water. You might get a shark fin on the TDI. You'll get the candlestick pattern, the pins. They will work that area for how long, guys? 30 to 90 minutes. Up to 2 hours, right? All those things coming together, that's what I'm trying to do for you. Put it together. Here it is. ADR high-low. The little dotted orangey line in the middle. M1. Yesterday's low. This is a high probability zone where the stop hunt will find rest. So now that we know that, we expect it to come in here, make the W, and reverse. For those struggling that don't see the W, this is a high probability area where the W will form. Okay, here's the high of the day. It was an M1, M3 day. You have the ADR high. You have the jar of mayonnaise or mayonnaise sitting right there. Price comes right out, 1, 2, 3 to the high. Damn if it doesn't hit the ADR high, mayonnaise, and M3 in one swipe. And then immediately the zone is shifted off of that high and traps everybody quickly. And then it runs right down to M1, hits the ADR low, goes into consolidation. Those greedy suckers got to hit the stops one more time low, and then they reverse right back into the range. Strong resistance, strong support. The high of the day with M3, mayonnaise, and ADR. The low of the day with M1, ADR, and the timing. Okay? Here it is. The M forming up. At the ADR high, the M4 pivot slightly above yesterday's high. What are they doing in there? What are they doing in that zone? What's going on over there? They are working yesterday's high right outside of the red box to trigger the stops and make people go long that trade the break, throwing the needles to the high side. Level 3 activity is seen, and then they're going to roll it over. Okay, some people are complaining about sound. Can everyone still hear me? I see my meter pegging, but I want to double check. Okay, thank you. Good. All right, a couple of guys, I know you can't hear me, but reboot. Okay, here it is again. This is the exact example. You have the S1 pivot, ADR low, yesterday's low. What's happening here? The railroad tracks are thrown right below yesterday's low, and they come right back above to trigger those pendings and hit the stops one more time. What do we expect to happen from here? Look at how they hit the stops in both directions prior to making that last trigger. They hit them, and then they hit them again. We expect this, right? Going into the next day, we expect this. Again, M1, ADR low, market makers work right past it, railroad tracks to the low, quickly get out of that zone. Trap the traders below the ADR, outside the red box, the reversal is imminent, there it is. Go back through the charts, you'll see these things. Okay, strike zones. What in the world is a strike zone? Well, I've been showing you some strike zones. A strike zone is an area where you can almost guarantee that the stop hunt's going to fall to or rise to. And it's going to give you the reversal. It's going to be your trading zone. Areas where price will find intraday support and resistance. When I say intraday support and resistance, I mean our support and resistance. I don't mean the textbook stuff. There are possible setups and exits. It's pretty much an area where there are multiple things that we have learned this week that are coming together or culminating or confluencing for a trade setup. That's it. That's what they are. All right, let's make a list. You guys write this down so you don't have to go back and find it. But anyway, if you're going to look for it, I don't even know what time it is. It's 13 minutes in on the second segment. Okay? Write that down. This is everything that we've been talking about since I got here. The age range is less than 50 pips. What is the count? What level are you at? A quick move out of the box, 3 swipes towards the high or low. Consolidation at the pivot? Possibly. M3, M4, M1, M2. How long do they hold that level? 30 to 90 minutes. There's no hurry to pull the trigger. You have 30 to 90 minutes in most examples. Submitted, he had 2 hours and 45 minutes to see if he was right. The ADR, high or low, is hit. Yesterday's high or low might be worked. The M or W is visible. The M or W in the TDI subgraph is also visible, or we have a shark fin and someone's bleeding in the water. The moving averages might be acting as support or resistance. 2 pins to the mayonnaise. Some of those candles coincide with what we were seeing. What? Railroad tracks? Evening star, morning star, hammer, spikes, half a Batman? One of those patterns will be present. 2 pins to the high, 2 pins to the low. Spike candles, hammers, right? This is your strike zone. This is all the stuff that you have to be looking for at the right moment in time for the trade to set up. Write this down and stick it to your forehead. Or I guess you won't be able to see it. Turn it around, stick it to your forehead. This is the stuff I want you to memorize. This stuff you should have memorized in order to conceptualize, right? The stages of learning, I'm not here to teach you all this stuff, but I don't mean this stuff, I mean to conceptualize versus learning. How do you learn? You memorize something and you regurgitate it. You haven't learned it until you conceptualize it, until you can say, without thinking about the checklist, yeah, I see that Asian range is 50 pips, I know I'm at level 2, I expect it to go this way today. Man, look at that ADR just fired, it's right there. Yesterday's high is low right around the tracer. Man, that's an M right there. Wow, look at the shark fin on the TDI. Wow, it's bleeding. That's what I'm talking about. When it's conceptualized, where you don't have to look at a checklist anymore, where you don't have to watch the tape or go to the tape to see what the hell this guy's talking about. You will have owned this system and conceptualized it. That's what you have to do to be very, very successful at it. Is that possible in a few weeks? Yes, you have the recordings. Nobody else had this opportunity. Go use this stuff. Make a list of this stuff. Memorize these over the next couple of days. And then go back and try to apply them to the chart as homework. I know that you weren't planning on doing all this homework right before Christmas. I wasn't either. But in order to have the success you want coming out of the box for January 2011, this is what needs to be done. Everyone learns at a different pace, and everybody needs to go back and see this stuff in the charts. What's going to happen when you do the homework? You'll start to believe that it's real. I know a lot of you right now are reeling and just can't believe that it's this simple to pick the high and low under market conditions. You just can't believe that I'm for real and that this is for real. So you're never going to trade big lots, 50, 60, 70 lots, until you get this and becomes yours. Make it your own. Kim said that in the beginning. Make this your own. I am not offended if you use another indicator. I am not offended if you make your charts purple instead of gray. I don't care. But in order for you to learn this, it has to become conceptualized in your head. Whatever that takes for you, however that is. Okay. This is one of the setups. Let's look at it. What do we got? Channel less than 50 pips. Pivot level holds. Stop hunt is 20 pips lower. Holds the Mayo. Blood in the water, shark fin. 3 levels of rise. Right through the red box. Outside spike to the high. Reversal's coming. Okay, does everybody see that? This is what I'm talking about. This is the set. Okay, 1, 2, 3 to the low. A hammer to the outside. Divergence on RSI. There's a big fat W staring at you for 1 hour. Again, there's 3 levels of rise. Strike zone. All these things coming together at the right point in time. There's the blue tracer too. Forgot. Went right to the blue tracer. Through the needle, past the blue tracer, came right back above. Because there are some group of traders that trade the break of yesterday's high-low. They think they're slick. Does it work as a system? No. It works for a couple days, then it reverses. Then they're going the wrong way. They'll trade the break of the high because they think it's an uptrend. And then on the third day, they are wrong. That's why I told you breakout trading fails. The regular breakout traders that trade the Asian break are only rewarded when? On the day the straightaway trade develops. That's it. That's why breakout trading is destined to fail. It's a 1 out of 3 market maker cycle trade. No break. You guys had one. Okay, so here's the setup. What are we doing? We're anticipating the trend, the market maker trend. But if the pattern presents clearly, trade counter trend with no fear. Market makers trade both ways every day, all day. Why can't you? Stop the baggage that has been ingrained in your head that the trend is your friend till it bends and all that crap. Let it go. Trade both ways like a master or like a market maker, since they are the masters. Grab these patterns without fear. Use tight stops. Make a bunch of money and break these guys. The setup. What is the actual setup? What am I looking for? We're going to count the levels on the 1 hour chart to see where we are. We're looking for bottom or topping out, level 3, where we are in the cycle. Is price moving against our bias? Don't get so jammed up in your bias or your analysis that you miss what's going on. Be flexible, be fluid. They don't even know which way they're going when they come on duty. It usually lasts a 3-day cycle, but they don't know. Why don't they know? Because it's not about the technical trend or the market maker trend for that matter. It's about the money. It's always been and always will be about the money. So if they come in and they've been rising for 2 days and they see that the contracts are straddled in such a way that they have to reverse, guess what? They're going to reverse. It's your job to identify that when they hit the stops high, when you expected them to hit it low and show you a reversal pattern back into the range. It's your job to jump on that, pounce on it, and take it. Will some fail? Yes. Will the 2-hour time limit help you? Yes. Did GBP CHF fail last night? Yes. But if you didn't throw in the towel and go to bed and pout and take the second level drop 27 pips lower, you made it all back. That's what I'm talking about. A trader. Fluid in your thoughts. Not afraid to go both ways. Take anything at the click of a mouse when it presents. No fear. That's how you make money in this business. Understanding what they're doing and trade it without fear. Okay, so now, the high-low test, level not broken, second leg MRW forms. Take the trade. Place your stop and your target. What's the stop? Anybody? Lazy guys, 23 pips above or below. Aggressive second leg traders that aren't afraid to take 50 lots, 7 to 10 pips above the low or high, right? Second leg traders, 7 to 10. Lazy guys, 23. Okay. Why? Why the 23? Remember? 23 if you take the first leg because the second leg might slightly pass that leg to trigger the stops. I don't want you throwing money away. Okay. Let's get dirty. Let's get into the stuff. We're running out of time in our little journey here. What pairs do I trade today? What am I looking at and why? How do I check down and determine what I want to do today? And you know what? You showed up in your office, who cares? Nobody. Market makers don't care that you're in your office. This is part of that thing I discussed about the 9 to 5 mentality that because I showed up today, I clocked in, I'm going to get something. This is absolutely destined to destroy your trading account and your trading. This is not what I'm talking about. Can you get something every day? Yeah, you guys have been. You guys are awesome. Pretty much all of you have been getting something every day. I seen somebody earlier, 70% day. That's absolutely insane. Congratulations, whoever it was. I saw it scroll by earlier. All right, here's the deal. Stop the 9 to 5 mentality and come in and look for the setups. If they present crystal clear, then take them. If they don't, do some homework and mail it to me. I get lonely at night too. Okay, I will look at them. The first order of business, when you come into your office, go to Forex Factory for news. They're the gold standard. The first Friday of the month, what do? I know, trade at 9:30. No, you should be done for the week by Friday, non-farm. But you guys won't. So here's the deal. If you're going to trade non-farm, take it at the session changeover at 9:30. Then look for the setup. Why? Because they'll spike high, spike low, repeat the level at 9:30 to hit the stops one more time, and then you should be able to get something. I know it makes a huge run on non-farm Friday most of the time, but you're having success in the business the other 19 days of the month. Give yourself a short week. Do something you normally don't do. Go to a brunch somewhere or something, or go sit on the water, or depending on where you live, go climb a mountain. Remember the Fed chair speaking? I told you, FOMC. You shouldn't be trading that late in the day anyway, but if you are, don't trade that. Can you trade the news? Yeah, but you don't need to. You don't need that garbage in your life anymore. Okay, you don't need to straddle the news right before it releases and try to get filled, and you don't need that shit in your life. You're better than this stuff now. You're better than all these mass email systems that are out there, these EAs, how to straddle the news 5 minutes before it releases, and how to use one broker's feed against another to try to see if you can beat the news releases. It's all bullshit. It's all out there. I've seen every last bit of it. You don't need that in your life anymore. Let it go. Get rid of it. I love him. His name is Roger. He's out in Las Vegas. He told me he probably spent $50,000 minimum on every single piece of teaching equipment and software and indicators that's been out there, and he was pissed off the whole first couple of days that he met me. I convinced him to go home and burn all that shit and throw it in the garbage and kind of like clean out his closet. He said it was cathartic. He said he just felt better getting rid of it, knowing that what he knows now, the truth. If that's what it takes for you to see this, go ahead, do it. Okay, Forex Factory is the gold standard for news. Avoid non-farm payroll till the session changeover, 9:30. If you're going to trade non-farm, 9:30. Wait for 9:30. Why? Because it takes an hour or so for the pattern to complete anyway. You'll be into the U.S. session changeover. I'd like to see you avoid the Fed chair speech completely, but you guys don't listen. You should be sleeping or you should be out enjoying the afternoon by then. News disrupts the technicals and should be avoided, especially while learning. It doesn't disrupt someone else's technicals. It disrupts our technicals because market makers get aggressive to take people's money. The news is used to help the market makers achieve their targets, not ours, their targets. And we don't know always what their targets are. We cannot see the volume or the buildup. So we don't know which way the news is going to go. They act against the market sentiment. When you master this method, you're going to be able to identify some of the new setups, yes. But again, you don't need that crap in your life. Okay? All right, we know we use Forex Factory. Red news should be avoided. Yellow and orange is okay. So you don't have to take off. This would mean you had to be off every single day for the week. Just avoid the red. New Zealand, I hate that pair anyway. Who trades that? No offense to anyone that lives there. All right, orange and yellow can be traded. Red should be avoided while learning, especially while learning. All right, every one of you has these. I call it an IDM or intraday directional matrix. When you're learning, it helps you get a rough idea of what's going on, okay? You want the daily color, red or green. The 4 hour, 1 hour. What's the direction? What's the count? Okay, I don't know why this one doesn't say it. There's a box on the bottom for the count. It's missing. You want to get a rough idea what the range is? M1, M3, M2, M4. Where will price roughly move? It should say right here, count. Level 1, level 2, level 3. Try to identify where you are in the cycle. Okay? If this helps you, use it. If it hinders you, throw it out. I'm not offended. Okay, now, remember your scan view I showed you? Hold this matrix up to your scan view and identify where you are. You can simply go, I'm confused here, this doesn't look nice to me, this is chopping, this is crazy, this is at level 3, look at that, this is a M formation or made a low, this is here, this is there. Eliminate the pairs and try to check down just a couple of good setups. Okay? That's what you're trying to do. You're going to have your favorites, everyone does. But the idea is to select a few pairs that are possibly at level 3 that might have a really nice tight consolidation. The box has not been blown out. That's what you're looking for. Those pairs that are not blown out, that don't have a news release, red, those are the pairs that will survive your checklist. That's it right there. You narrow it down to a couple of pound crosses today. GJ, GC, pound. That's what you're looking for. Narrow it down to a couple of pairs that you can work. Okay? Daily chart. Color of the current candle. Why? Pivot points. When I say current candle, I mean the one that closed yesterday at 5 o'clock. If you're at 2 in the morning looking at your charts, it's yesterday's close, right? Nothing else is needed from the daily charts. That's all you want to know. The direction, I don't care. The trend, I don't care. Why? The daily chart is too slow. You'll miss this action waiting for that to develop. Now, does these patterns show up on the daily chart? Yes, it's crazy. Go look. You'll see a big fat W on the daily. You'll see a big fat M on the daily. Why? The joke is with these guys, and I didn't make this up, is that people are stupid in every time frame. Okay? That's what they say. That's what I was taught. People are stupid in every time frame so they can trap them at will. The difference is people that trade the daily charts have a monster drawdown when they're going the wrong way. Hedge fund traders, money managers, the bigger the accounts, and people that trade off the dailies get stuck deeper. That's all it means. The 4-hour chart. What's the color of the current candle? What's it doing? What's price been doing for the last couple hours? Has it been dropping overnight? So then we expect to put the brakes on so 2 red bars on the 4-hour chart, and we see a needle showing. We're getting into the U.S. session red box. Yes, that's what I'm asking you. What does that look like to you? Is TDI showing support or resistance on there? Is there an M&W formation or some type of other formation giving you a clue that that's the brakes? Is there a trap move? Can you see it? What level are you on? You ask yourself these questions. If you've been just looking at screens all your life and not asking yourself internal questions, you're doing it wrong. You need to be asking yourself these things. Where am I in the market cycle? That's how we tie this together. This has to become conceptualized for you, where you look at the chart and you go, the 4-hour looks good. I see 3 levels of rise in there. There's a pin to the top side. Remember the 4-hour chart I showed you with the perceived trend versus the real market maker trend? That's the shit you're looking for when you're looking at a 4-hour chart. Okay? There it is. Price has been dropping. They put the brakes on. They already threw the needle. If I see this on a 4-hour chart and I know that I'm getting into the red box, I know where I'm at. I know that for the last 4 hours, they ran the stops extremely low. They made the pin, and that they're probably putting the brakes on. So I have an idea that the reversal may be coming. The same thing on the 1-hour chart. What level am I in? How many days am I in the cycle? What's the 1-hour close or pattern look like? Railroad tracks on the 1 hour? A big fat M on the 1 hour spread out from yesterday to today? Spike bottoms, spike tops. Remember those? The trap moves are made at the highs and lows of the chart. So if there's spikes to the top or spikes to the bottom, that's a trap move. Am I at the midweek reversal? Did this level show up on Tuesday that they're at now? Also, what's the current color of the candle? Remember the backside of the hour trick? Okay, if the candle's green but I see the high to the left, I'm going to wait for the backside of the hour for that to turn into a pin to confirm that I'm at the M or the W. Is it breaking the previous high or low? Light blue tracer, remember that? Okay, if we're breaking the previous high or low from the blue tracer, now we got to wait to see the close. If they close below that, we got it. If they close above, we're waiting for what? Next level strike zone. What condition of the market am I in? How do I know? Am I sideways consolidation? Am I hitting the stop hunt? Am I running the trend? Is it 2 in the morning? Is it 2 in the afternoon? Where am I in the market cycle? Where am I? That's what you're supposed to be asking yourself when you're staring at the screen. Okay, now we see the 1-hour chart. Look how that coincides with the 4-hour. Okay, we've seen the consolidation. There is the spinning toppy type pin bar to the low thingy, right? Whatever you want to call it. There's the shark fin, the TDI, also on the 1 hour. The patterns will appear the same on the 1 hour, 4 hour chart. That gives you a clue that market makers consolidated, they hit the stops low, they pinned, and now I expect the reversal. I'll look at the 15 for the W formation in this example. Okay? Every one of you have this checklist. It's in your folder. If it's not, I'll give it to Kim. It'll be up there. Am I at a news time confirmed by Forex Factor for about an hour? Why do I need to be out of the news for an hour, Steve? You said that I can pick these patterns off and I'm the man. Well, here's what happens. About an hour before the news, liquidity dries up. What do you mean liquidity dries up? I thought it was a $4 trillion market. Here's what happens. If you have a shitty trade and you're in it, the dealer is not obligated to take it from you. He doesn't have to buy off of you when you're in something. Now what happens? You got to ride this sucker out during the spikes. If you hold a trade 30 minutes before non-farm payroll and you click your mouse and want to get out, you're going to get requoted or rejected. Remember the plug-in I showed you in the first day? You're going to offer him 10 lots of USD JPY 15 minutes before non-farm. He's going to go, this guy's got to be kidding me. And he's going to hit reject on his mouse. You're going to be stuck with that trade now. That is why I want you to try to get out of the news about an hour before. before it dries up and before they make an ass out of you? Is the accumulation channel less than 50 pips? When you're learning, a tight channel is imperative. Can you redraw the channel in the shift of the zone? Yeah. But you're looking for a tight channel. Why? So I can see them trade 25 to 50 pips above or below that new range. What is the count? Can I identify the count? Am I 25 to 50 pips? I'm sorry, I'm losing myself here. Am I at level 1, level 2, 3? Where am I? Where am I in the market maker cycle? Do I see a peak formation high-low? Am I at the midweek reversal? Are repeating the level? Where am I? Okay, third level triggers, 1, 2, 3, M formation, W formation. Third level triggers, 1, 2, 3 to the high, 1, 2, 3 to the low. Is this thing forming up? Has the HOD or LOD locked in for the day? Have they set the high and it's been holding for about an hour? Is it holding? Does the 1 hour close or the 1 hour chart agree with what I'm looking at? Am I at the pivot extreme, M1, M2, M3, M4? Is there a TDI signal present? Shark fin high, shark fin low, blood in the water. And what candle formations are present? 2 pins of the mayonnaise, shark fin high, hold the mayo. Those are the things that should be coming together. Timing and all these things coming together. This is the checklist you must ask yourself. 1 through 6, there's a double break spacer in there. Why? 1 through 6 are imperative. 7, 8, and 9, I'd like you to use them, but the likelihood of all 9 being checked at any one time is very difficult. But when you're learning, number 6 needs to be there. Okay? I'm not trying to make this more difficult for you. I'm trying to make it easier. If this is doing that, let me go back to about 50 slides ago. You know what I'm going to tell you? Second leg, M or W, after the stop hunt, sell and buy. That's it. That's the business. Okay? Some of you are saying the stuff is missing out of the folder. It got corrupted when I mailed it. You will have it before I go on break. I'll get it to Kim tonight. Okay? If this stuff is making it harder for you, that's not my intent. The goal is second leg M or W in line with the count. That's it. The second leg M or W is the highest probability trade that there is. If you can find those setups and those setups only, you will have enough success in this business that you won't need any of this other stuff to cloud your mind. But some of you are lost, and some of you need this help. So I'm presenting it. Okay, there's your 15-minute entry. What did I show you? The 1 hour was showing the needle, right? The 4 hour put the brakes on. The 15-minute had a 43-pip channel, and damn if it didn't take 3 swipes to the low and pull back and go into consolidation. When they were making this consolidation, 1, 2, 3, 4, that's 1 hour. That made the needle on the 1 hour chart and the 4 hour chart. When they pulled away on the 1 hour and 4 hour, those charts formed up. There's Dean's shark fin to the resistance line or support line. Notice that this is also a shark fin and a W when it crosses the blood. Okay? Shark fin low, W formation. This forms out the first leg of the W. Outside pin to the low on a pivot. Those are all the things coming together. What do you got? 1, 2, 3 to the low, shark fin low, blood in the water, consolidation, forms up the 1 hour, 4 hour, and 15-minute entry. Game over. You own it. The trend is up. All time frames agree. Level count is confirmed. Price comes out of the channel, sets the low of the day as a stop hunting action. You observe 3 moves to that low. Market makers hold the level for 30 to 90 minutes and work it. Consolidation accumulation is occurring. They are collecting contracts for lower level short holders. Market makers come near the low one more time to induce a lower level short selling frenzy, if you will. But they don't take it out. The low holds. In a 1 bar move, shorts are now trapped. Remember the shift bar, shift the zone? You should be long if you weren't already. I want you to learn how to deal before the shift of the zone occurs. In railroad tracks, it's only 15 minutes, you're going to miss those. I understand. But in outside half of Batman, when they consolidate, you need to be in the trade before they shift the zone off of the low or off of the high. Because that's the bar that puts you in profit with no aggravation and no fear. The minute they shift that zone, you're up 15, 20, 30 pips. It's game over for the day. Okay? This is what you're looking for. Is anybody writing this? Okay. If you're not writing it, why don't you mark down 39 minutes into the recording, and then you go back and get this checklist. Okay, some people saying their hand hurts. Sorry. You should try it without the recordings. I make everyone write everything down. I know, Lou. Okay. I'm going to give you a second. I'm going to sip some Diet Coke, of course. As I can talk, that's pretty neat. We need you for sure. All right. So this is what you're looking for as the things come together. That's how you tie it all together. Okay, so what happens? Price breaks out of that consolidation zone created by the confusion. When market makers were working back and forth and creating all this craziness, you're calm in a sea of craziness. The board is flashing, it's erratic, prices are moving, you know what's going on. You know where price is going. The next thing that happens on the shift of the zone, a 513 crossover signal will fire. That is too late to enter for my method, but it is another confirmation that you're going the right way. TDI agrees perhaps a fin might be present, the shark's hanging out. If you are not long by this time, I have now is a good time to be, but actually you're a little late to the party. Okay? The first target when you're learning is the high of the day or the low of the day. Think about this for a minute. What's the Asian range? About 50 pips. What's the stop hunt? 25 to 50 pips. If you take the Asian range and they run the stop 25 to 50 pips lower, and you target the high or the low after they make that move, there's about 100 pips there for you. So you can carve out your 50 or you can go on. You're going to notice that when it hits the high, the previous high or the previous low, that sometimes it'll bounce off of those zones and go back into the range. I can't tell you enough how greed will kill you in this business. A good float, a good number to make is 50 pips and multiple pairs every day. That's a good target. Some of you are already beyond that and doing much better, then ignore this section of the tape. But what I'm telling you is that after the initial high and low is cut, the channel's 50 pips. If they drop 25 to 50 pips lower, you take the reversal, you're going to hit the high, which is about 100 pips out, or 75 pips out. An easy grab for anyone. Okay. What was once deemed impossible can be achieved before breakfast. Okay? I know now you guys believe, because I've seen your statements, and I have seen people that are hitting 70, 80, 100% in a day, winning contests at FXDD. That's absolutely phenomenal. I couldn't be more proud than that. It's kind of neat that the break actually wound it up at the break time. So it is, I think, about 10 after. Why don't we do a 10-minute break and get right back on it? We're getting there. We're almost done. I hope you guys are getting the material. I hope it's soaking in. We have a few more things to cover, and then we're going to be done. Our journey's over here today. Okay, I'm going to break. See you in 7. Okay. Let's get through this stuff. We got about another hour or so. Okay, putting this all into action. Okay, we've seen everything. We've talked about the setups, what you're supposed to be looking for. Now, how do we put this into action? Okay, I have a video. Let's go to the video. This is what it's supposed to look like. I don't know if it's going to run on here, but we will try. Okay, I'm going to be quiet. Just watch this run for a couple minutes. This is what the move should look like. Okay, I'm back. How many of you chickens got out on the first three little consolidation zone right here? Okay. All right, what was this? 3 strikes at the low right around the M2 yesterday's low, light blue tracer, right? Price immediately reversed. The shift candle came off of the zone. You had about an hour and a half of straight rise, right? 1, 2, 3, 4, 5, 6. 1 hour, 30 minutes. Hit the stops high, hit the stops low, consolidate or pause. Notice the pause is about the middle of the session between the blue and the red box. It just so happens to coincide what we talked about lunchtime for those guys. There's about a 45-minute break in there. It's kind of funny. Okay, they hit the stops in both directions. They push it high again. They throw the outside pin to the high. This is one of those days where only 2 levels will be seen. Correct. No W formation. Why? This is railroad tracks with the shark fin slightly outside. Then there's blood in the water at the market baseline. Someone asked me that I'm showing some things that are not below the blue box. Yes, absolutely. The blue box is a guide. I told you the best setups are 25 to 50 pips below or above the blue box. If the blue box is moved or the consolidation zone is shifted, redraw the lines. Some people in California threw the blue box away because they can see the consolidation zone absent of the blue box and understand that this is the consolidation zone. There's the 3 hits to the low. TDI is also throwing an inverted head and shoulders. Does everybody see that? Shoulder, head, shoulder. It's kind of crazy, but it's right there. It crosses the market baseline and the 50 around the same time. At the same exact time, they shifted the zone off of the low. The 513 arrow fired. This is not an acceptable entry. You're late to the party. This is the acceptable entry, either here or on this little candle. I like to see you enter when the railroad track closes after 3 swipes to the M2 low at yesterday's low. That is the perfect setup. Notice how they pinned right past yesterday's low. Okay, that's what it looks like. Understand, this is 4 or 5 hours of video. When you watch it in real time like this, when you identify the railroad tracks to the low, you enter here. There was no drawdown. Do you see how quick you were into profit? It's absolutely amazing. If you entered here or here, within 15 minutes you were up big. Okay. I'm going to paint for you guys for a while. A lot of questions coming in about handling the stop losses. Yes, very important. I agree completely. I told you the number of the stop loss that it should be. Now, when you're learning, what do I want you to do? I want you to learn to risk. I'm going to go textbook on you guys. When you're learning, 1 to 3% of your account balance. Why? I want you to eventually trade 5% of your account balance. But right now, when you're learning, this is what I want from you. How do I calculate that? How many lots can I trade? Okay, first of all, you have to take, let's just take a $10,000 account on average. If you have a $5,000 account, cut it in half. Okay? Now, if you're using a 10 pip stop, what is a 1% risk? $100. So you can trade one standard lot with a 10 pip stop loss. You can trade 3 standard lots with a 10 pip stop loss for a 3% risk. In every other textbook, that's kind of high. But what I'm telling you is that if you take 3 standards and hit 175 pips, which people are doing in here already, do the math. It's a pretty good day. And then if you take it back the other way, it's even better. Now, if you build confidence in my method and are hitting 9 out of 10 and having the success that you deserve in this business, I want you to risk 5%. That is 5 standard lots on a $10,000 account. By anybody's definition, that is over-leveraged. By ours, it is a joke. Now take those same 175 pips or 250 pips or Subio's 5 million pips and risk 5% of your account balance and see where that leaves you. Okay? When you're learning, I want you to be textbook. I want you to go 1 to 3%. Why? Because you could be wrong 100 times at 1% and then finally lose your balance. If you were wrong like 60 times, I hope you quit and call me or email me. I hope you're not wrong that much. Something's wrong. You missed this whole class and the whole concept I've been talking about. You should not get stopped out more than 2 times in a row. Okay? You should not get stopped out more than 2 times in a row. Why? Because there's 3 levels of rise and 3 levels of correction. So if you do exactly what I told you and you're getting stopped out too much, something is wrong. You're missing the boat. Stop trading, especially if it's live, and get with me or Kim and let's get you square. Okay? The next question that's coming up is how do I handle my stop losses when I convert a spot to a swing? Here's how we do it. These are about 150 pip levels over 3 days, let's say. And then on Friday, they take it all back, possibly. Okay, so here's what we do. We catch the second leg W formation right here, bullseye. If we know we're going to be making a swing trade, you want to move stop to break even when you are plus 50 pips. For some of us, that's our limit. Okay? Now, when 50 pips profit is seen and you decide that you are going to convert, move your stop loss to break even and leave it alone. The market will chop back and forth. It will do its thing. You might see 3 levels of rise in here. 1, 2, 3. There might even be a reversal back into the range, which will take a lot of that trade back. Okay? The stop loss is not adjusted to behind level 1 consolidation until level 2 has begun. So at the blue box the next night, when the stop hunt is made or the straightaway is made, the level has begun. The stop loss is moved from here to here, 7 to 10 below the lowest point of the consolidation zone. It could be a new W formation. It could be a pin from a straightaway. Okay? It makes another run, 100 pips or so for the day. Maybe you get 1, 2, 3 levels in there again, right? Maybe it doesn't make a reversal. Maybe it makes a small retracement and does this. Now you're at level 2. Maybe this is Tuesday, Monday. All right, Monday. Forgive my writing. It's horrible. I know it. Monday. Tuesday, right? Now we're in consolidation, level 2. Now, what do we expect? We expect them to hit the stops low and continue on. Wow, that was weird. Hit the stops low and continue on to form out level 3, okay? The stop loss is not moved under level 2 until the London Open. Why? Because we expect them to come down and trigger the stops lower. If we move it here, we might as well take profit in the zone because we're throwing away money. Right? So when market makers make the stop hunt, the trade is still valid for an up. They hit the stops low. If they come out and hit the stops high, you either miscounted or something else is going on. You exit the swing trade when they hit the stops high. You manage to trade from stop hunt to stop hunt. If this works out as you planned, you are now in level 3. Erratic behavior will be seen. When they hit the stops high to coordinate with a session, maybe London, maybe US, when they hit the stops high, again, you need to exit the swing trade. For a maximum gain of 200 to 600 pips before they take it all back, depending on the pair. Okay? They will take it back because this is entirely too much net change for the week. That's why when you see extended moves, most of the time, they take it back by the end of the week. Unless they are shifting the zone for the seasonal or quarterly targets, totally different. But as a norm, the swing trades can capture 200 to 600 pips, depending on the pair and depending on the ranges of that pair for 3 days. Then what happens? If you happen to catch the midweek reversal, Monday, Tuesday, Wednesday, take the trade off and reverse back the other way till Friday. Because they make a unidirectional swing for 2 to 3 days. Simple. That's how you handle the swing trades. Stop loss comes behind the consolidation zone after the zone has been broken and the next level is commenced. Simple. Okay, now, how do we handle stop losses for scalers? Okay, first of all, I can tell you that one of the things that's a problem is you guys get your fingers in there and muck up most of those good trades because you're too worried about handling your stops. You're so afraid to lose money that it becomes a self-fulfilling prophecy and you actually lose the money. So now, how do we handle that? You do need to create some type of safeguard for a scaling in situation. What would that be? Okay? When you start scaling 5, 4, 3, 2, 1, think about this. Let's say we're going for 50. A lot of guys go for 50 and scale in and take a 50 pip run and make multiple trades on that run. Think about this for a minute. What's the difference if you take one trade every day and make about 25, 30 pips? Or you take multiple trades on an aggregate and end up with 50, 40, 30 in one cycle. First of all, it's much better. It's safer because if you've identified the right market condition, you're only risking one day. Your risk is today. Tomorrow you have to identify the cycle again and the next day again. You should be proficient enough to do that, but as this trade moves away from the high, it's more and more correct. So why not add in on the aggregate like market makers do and limit up 3 trades? 50, 40, 30. Right? 90, 120. Most people don't make that all week. You'll make that on one aggregate. So now, if you scale 5, 4, 3, 2, 1, how do you handle the stop loss? Well, I can tell you that after the first order shows a profit, you enter here, and again here, right? 5, 4. As soon as the first order shows a profit and order 2 fires, okay, when order 2 is halfway to order 3, you're up about 20 pips. Move stop loss to break even on order 1. There's a script for that. We'll cover that in the January 4th. When order 3 fires and gets separation from 10 pips, what are you up? 10, 20, 30. Right? You're up 30 pips. Move your stop loss halfway between 4 and 3. You will not lose now because 5 and 4 will not be canceled out by your retracement on 3. And that's it. Let it go. Let it hit its 50 or let it run. When you have separation from your last order, whatever it is, when all of these 5 orders are on, let's say you're doing 4, 5, 4, 3, 2. When you get 15 pips separation on the last order, get the stop loss out in front of the entire aggregate and leave it go. Count to 3 and make a fortune. Now, if you got 5 orders on and you identify that you got the midweek reversal, hold the trade for 2 more days. Okay? Hold the trade for 2 more days. If the stop loss is out in front, the worst you can do is make what? 10, 20, 30, 40, plus 15, about 55, 60 pips out in front of this aggregate. It's going to be different on every run. The worst you could do is get stop loss triggered and collapse to 60, right? If you hold this trade and it makes a 200 pip run as a swing, add 200 times 5, that's 1,000. 200 times 4, that's 800. 300 times 2 is 600. Do the math. It's monster. Okay? If you know how to do this already, and a lot of you do, if you apply this to my method, it is lights out at your brokerage house. Okay? If you're struggling with this, we will cover it some more later, but this is the basic way to handle the stop. Now, how about if Steve, I'm going to go for 50 pips with 50 lots or 50 pips with just a regular setup. Okay? How do I handle that? It's just a little bit different. Now, I told you I don't like trailing stop. The broker provided it's crap. But if you use it a little bit differently, it will help you. Some people have sent me some scripts and some EAs that handle the stop loss. I cannot, in good conscience, pass that stuff out until I analyze it. Not that I'm the expert, but I need to get Robert Hill to check it for bugs or Ray to check it for bugs, and I also need to make sure that it's going to do what it says it does. I don't want to give anybody anything that causes them to lose money. So it's going to take some time to run through this stuff and make sure it's good. Anything that I get, I know Masood and Ray are working on a checklist algorithm. Ray has been programming for us. Anything that I get that passes the mustard test or whatever you want to call it goes out to the group. It's for everyone. I lose nothing by illuminating the path for you guys. We all make money together, okay? So anything that I have that works, that helps, is yours. Simple. Okay, now, Steve, I want to be a 50-lot trader, and I don't have any of these fancy EAs. I can't sit up all night and watch. What do I do? Here's what you do. You identify the M or W in a trade, take it, put on your lot. I don't care if it's 1 or 1 million. Put on your trade. Wait for 32 pips of separation. Why that number? Because it works. That's what I was told. Okay? 32 pips of separation. So what would you do? Your stop loss is right there. Now you trail by 32 pips. When you are plus 32, what's going to happen with the trailing stop script? It goes to break even right here in front of your order, right? As it moves up, if you're going for 50, the worst that can happen is if you hit 49 and just miss, you will end up with a trade that nets you, I can't remember the number. What's 49 minus 32, anybody? Like 12 or something like that, or whatever. I'm terrible at math, right? 17, thank you. Appreciate it. Appreciate you math magicians out there. I know y'all use a calculator, don't lie either. Okay, look, you'll end up with a trade that is 50 lots times 17, a scratch. Okay, why? Why do we use the trailing stop? Because if you can't babysit the trade, it's a shame to turn a trade that goes 48, 49 pips and you just miss and comes back and turns into a minus 10. That's a crime. Or a minus 15. That's a crime. So what you do is practice picking the high and low perfectly. Trail the stop by 32 pips and walk away. You will be surprised how many times you hit your 50 pip take profit. When you become to where you're hitting 9 out of 10 without fail, or you're scratching a couple of times at 17 and you're still hitting the rest, start piling on the contracts, man, and kill those guys. That's it. That's the plan. It's simple. It's easy to do. I know people like the pods, and I can't even tell you all the people. Their name, I guess, I don't know, everyone remembers their name. It's easy. But there's a lot of people out there getting it and are beyond this already. I'm ecstatic, beside myself. I'm sitting next to myself in a chair. I'm so excited for you guys. But if you're struggling, try this stuff. Try this stuff. This will help you become OJT, so to speak, on-the-job training. While you're making money, you're learning, you're building your account, you're building your confidence. You're never going to be able to trade 50 lots if you can't trade successfully with one, right? Baby steps. My goal for each and every one of you is to be a 50 or 100 lot trader or to scale in 9 million times and be like a Subio. That's my goal for all of you. Lauren, if you're listening, my goal for you is to be successful. That's why I'm doing this. I started getting kind of like, I don't know if nostalgic is the right word, or I don't know, like philosophical. I don't know. Like, I don't meditate or nothing. I wasn't losing it like that. You know, I'm not humming to myself and all that. But I had a baby. My life changed. I feel different about things now. And I thought to myself, it's an absolute crime to take this knowledge and die with it inside my brain. And I thought it wasn't fair. After these guys destroyed my commercial real estate holdings, they destroyed my property value, they took money from everybody, I thought, what a good way to get back at them is to expose what's going on in the market and to create a movement, almost grassroots, to help people learn how to really get their money back. So anyway, that's what I thought. That's why I'm out here doing this, and my goal is for you to get it. My goal is for you to learn this and to get it and be successful and to enjoy the things that this business has to offer. It's out there. I was told there was $50 million sitting at every price point, every pip. You don't think you can carve out a couple $100,000 for yourself a year with that much liquidity and that much money flying around out there? Of course you can. This is the way to do it. Okay? All right, we're getting there. We're getting to the end. Hope you guys aren't crying. All right, the straightaway trade, very important. We need to talk about this. All right, take some notes. This is the most difficult trade to recognize. Everybody struggles with this trade. Why? Remember the thing I showed you? Market makers know who's in margin trouble and what's going on with their account. They know. They're like, oh man, we got 37 people at 25 or 27% margin, a few more ticks and they're done. We got them. So no stop hunt is needed. The trap move was made on a prior day or prior session. The peak formation high has formed. The peak formation low has formed. They shift the zone off of that low, go into consolidation. They got everybody on the fence. Their red lights blinking on and off in their account. They know this. They see it and they know it. How did they get those guys? If they come back with a stop hunt towards the peak, they repeat the level and release some of that margin back into the aggregate. They can't do that. Those people can click out. They can go, ooh, I got back 150%. I'll take it. It's enough margin. I don't kill my account. They don't repeat the level. They don't come near the level. They don't make the stop hunt. If they did that, they might release some of the money. Remember, it's about the money. So now, the trap move is made. It will look like a bigger half of Batman. It will look like a larger half of Batman. And it just will roll straight out of the box at the London Open or the U.S. session, depending on when it was set up, and will just take off and be gone. You know better now. You see the trap move. You see 3 levels of drop. It goes into the peak formation and extended consolidation until the next day. You are at level 1 consolidation. The straightaway trade is bred out of this area of the chart. That's it. That's where it comes from. So you can anticipate it. So if they break high, you don't trade back towards the peak formation. What did I tell you? Never, ever, ever trade against the peak formation at a level 1 consolidation. Can you make money there? Yeah. But so what? There's enough money in the other segments of the chart that you don't need that trade. You can pass on it. The easiest trades are the stop hunts that are identified in line with the peak for the 3-day trend. Those are the easiest. Okay. Here is the straightaway. Market makers run down. They just happen to put the brakes on the mayonnaise. What are they doing on that mayonnaise? Look at this. They hit it, pull back, hit it, pull back, hit it, pull back, hit it, pull back. How many more times can they hit it before you get it that that's the brakes? They're stopped there, right? The low holds for the entire session. From mid-London through the U.S. and into the U.S. Open, the low of the day holds. TDI is divergent the whole time. It's climbing. See it? Okay, now, They make the shift into level 1. They throw the hammer at the top of the day and they go back into consolidation. Now what happens? They already started during the Asian session, but we're looking for a stop hunt, right? Here's what happens. See the area of confusion where they break 3 swipes to the high and people think that that is the stop hunt back towards the peak? That is the wrong trade. What happened is you're coming out of level 1 consolidation. They make the minor pullback, redraw the consolidation here. This is actually the stop hunt, ever so tiny, but it doesn't break the Asian range. People will sell into this and get killed. This is not a stop hunt. This is actually the second level of the rise. 1, 2, 3 for the reversal to end the day. Repeat the level. But because you understand now that this fake move coming out of level 1 consolidation is the straightaway area, you understand that this is the bias. And it happens to coincide with the natural technical trend. So you're looking for the pullback towards the watermark or the mayonnaise after the trap move peak formation low was set from yesterday. That's how you identify the straight. This is the area of confusion. This is actually 1, 2, 3. Intraday. Consolidation 1, 2, 3. Now you got double pins to the top mid-session. I would wait for the U.S. double top confirmation is a safer trade, because there's the form out and then it comes back in. Okay? Did you notice here is yesterday's low, light blue tracer. Trap, 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 induce short selling, hit the stops in both directions. Level 3 behavior is quite erratic through the session. They shift the zone off of the lows. Finally, on the last trap move, mayonnaise holds. TDI is divergent the whole way. Level 1, hammer to the top, pull back to the watermark, right? Remember I told you the target in the U.S. reversal is watermark. Goes into consolidation. We know that this is level 1 consolidation because there's the peak formation midweek. Bam, we're looking for the straightaway. Okay? If the blue box is confusing you, kill it. If you see this right here, this could be the stop hunt or the W formation in line with the peak. Back up. This would be one of those trades, Gloria, where you take it during the Asian session. I don't want you to do that. It's too confusing. I want you to take out of the blue box when you're learning. But this is the trade, the area of confusion for everyone. When they throw that pin to the high, they go to make the second leg. The second leg fails and makes another level higher. So if you were waiting for second leg confirmation, you never get it. That's why I told you M or W are better trades. Much better trades. Okay. Write the notes for the straightaway trade. Market makers trigger the stops and trap the volume in a previous move yesterday. Peak formation high or low. The opening channel gets tight. Price drops or rises out of the open and never comes back. They don't hit the stops. They're already jammed up. The people are jammed. Also occurs after a big move as a continuation trade. You might have like a big, I don't know, 100, 150 pip move off of the low, the peak formation. It comes back and continues with the trend, right? The new trend, the market maker trend. The moving averages in this case can help you with guidance for entry if you know where you are. Look, the moving averages are up, right? In some instances right here, it pins the 50 perfectly. It pins the 50 perfectly. We call that a 50-50 bounce. Hits and at least goes 50 pips, right? But here, it didn't pin the 50. And in class, we would look for these. But look, it comes right back, hits it, or doesn't hit it. There's no stop hunt lower than the box, right? There's no stop hunt here. People think this is the stop hunt. But this is the trap move. You're trading in line with the peak. The trend, the market maker trend, and the perceived trend are up. So this is the day that the breakout traders of the world make a profit and flare their chest at you and tell you why you should be breaking out. That's the day. It happens 1 out of 3 times in the cycle. Okay? All right, back to the other slide some of you were writing. Okay. There they are. I'll be quiet for a minute and let you guys write, and then we'll move on. Okay, the straightaway setup will most often occur as a level 1 consolidation trade. Understand what happened. Lower, higher levels are trapped and approaching margin trouble. Market makers finish them with this move. Do not buy or sell level 1 consolidation against the peak, period. That's it. That's how you stay out of that. Sometimes they work, sometimes they set up. You could trade back towards the peak. I understand that. But when you're learning, there's enough out there that you don't need to get jammed up with this stuff. Okay? This is what I'm talking about. This is it as a diagram. The trap move is made here at the low of the day, the W. They shift off the zone and hold the consolidation into the next night. Coming out of here, there will be no stop hunt. Okay? Price just comes out and gets on with its day. There will be no stop hunt because they don't want to trade back towards the peak to release the money that is trapped in this aggregate. That's why that happens. Okay? Same thing for the upside move. They hit it, miss the high of the day, shift the zone off of the high, go into consolidation. No stop hunt will be seen to the upside back in line with the peak. Can't do it. If we do it, we lose money. We're not in the losing money business. We're in the beating the shit out of everybody business. That's why there's no stop hunt. Now, it comes down here, might make a W, and that confuses people, and they take it, and then it doesn't pay out. That's what happens. Okay? Then you say Steve's crazy and the system doesn't work, and the guy's smoking crack. You took the wrong directional move out of the peak formation high coming out of level 1 consolidation. Okay. Here's the straightaway trade again. This is a blow up here. They hit it, they come down, they shift the zone off the low, go into consolidation, level 1, consolidation. This looks like it might be the stop hunt. It pins right to the 13. Okay? Now you have the rest of the rise. Sometimes, this is the day the breakout traders of the world are rewarded. Right here, see? They took the break and it went. That's a nice trade, but for the most part, that doesn't happen. It's a 1 out of 3 proposition, so 33% winning percentage. That is not good enough to be successful and trade 50 lots in the business. Okay. I want you to do this as part of your homework. I don't want you to send it to me right now, right? I want you to identify peak formation high lows. Look for previous trap moves and levels. Mark your charts for my review personally in discussion when you email it to me. Another homework assignment. I'm killing you guys for the holidays, right? This is what I want you to do. I want you to go back and put everything together. 3-level rise, 3-level drop. Level 3 identification, one more shot at the stops, reverse. I want you to identify what level 1 it looks like and what the straightaway sets up as. Try to see some of these things. I could tell you that my successful guys in my group have done the homework. I can't say this enough. Zen and his wife have gone back, I think, 5 or 6 years. Ray has gone back 5 years. Rick, 5 years. The guys that are making the money, Abo, the guy that was his monster chart vision, I don't even know how many years that guy went back. He does homework like nothing. It's amazing. Those are the guys that are making all the money, have done the homework. Think about that. The homework helps you see these things in the past. I know you're like, oh, it's no fun, it's the past. You know what? I always say this, and I got to say it one more time for the recording. If you cannot see this stuff in hindsight on the chart, you will never see it in foresight and in real time, period. Carr, that was for you, buddy. Okay, so trades and setups and counter trend, the New York reversal trade. It's a range trade back into the range. It doesn't offer up as many pips as a typical trade. Sometimes it does, sometimes it doesn't. It happens around 8 to 11 a.m. Price hits level 3. The high and low have already been formed. Price has met or exceeded its ADR for the day. Price has separated itself from the moving averages. Angle separation fanning out, right? Price forms a reversal candlestick pattern at the appropriate time. 8 and 11, 9:30 maybe, coincide with the U.S. equities open. Open the trade upon RSI or TDI confirmation. Shark fin high, shark fin low, blood in the water. Back under the water, right? The profit target is the 50 EMA, or about the middle of the range, approximately 40 to 50 pips, or until day-end consolidation is observed. Close the trade. If you happen to identify the weekly reversal while you're in that cycle, convert that trade to a swing. Simple. Get your stop out in front, convert it to a swing. Okay. Here it is. New York reversal. This is like perfect. This is what happens, kind of weird. The Asian session had to move this time, 130 pips. London did most of the consolidation, made the push towards the high one more time late session, made the perfect W formation, and then took it all back and went right past the mayonnaise and ended the day about where it started. That's one of those days when you took the W and there was 100 plus pips offered up on the second leg perfectly. New York City reversal. Why is there a New York City reversal? I don't know. That's the cycle. But it changes. Remember I told you that London usually makes the move? This is an Asian move, sideways London, a little continuation, W formation reversal, right? They give guys different jobs. Right now, he got to run the trend. He was probably all excited and called his wife and said, I'm going to get to run the pairs today. Okay? He didn't have to be the accumulator. They did some accumulation in here. The entry is after the second leg of the W, in here or in here, depending on how you see it. I like that as an entry, but this is a good entry too. It happened exactly like this in CHF last night. Well, not exactly, but pretty close. It happened like this in GBP USD umpteen times during the course of the year, and about like last Thursday going into last Friday after Kim and I spoke before this was set up. If you don't believe me, look at the charts. It happened right after I did one of my sales meetings. Exactly like this. Okay, so this is a sticky entry. This is a straightaway entry, right? Remember I told you pins to the averages? You don't see this. It looks weird. You didn't take this trade. You were confused. There's maybe a W, pins to the averages on the straightaway. Okay, I get it. You missed it. So what? You come back in a few hours. Remember I told you, take a break. You missed the entries? Come back. Then what happens? You have the outside hammer after the trend was up all night going into the U.S. session. They spike, pull back in consolidation. You're a seller in here, and you go bam, right back to the 50. It pulls back, second leg is formed out, and finally comes to rest on the 200. If you miss the straightaway, the clear-cut opportunity after 3 levels of rise is available right here, going back into the range. So if this trade is missed, there's a nice opportunity for yourself to make it up. The pods traded both ways and killed it. Zen and his wife trade both ways and kill it. Carr and Scott out of New York trade both ways and kill it. Abo, when he's in school, can't stay up all night. So he comes in the U.S. session right before school, and he bags 50 pips with 50 lots. Because he knows the reversal's imminent after 3 levels of rise and the W or the M forms, he bags it. That's what I'm telling you. If you miss this, you don't have to go, oh man, I missed it, and I don't understand, I didn't see that, and chase it. Just come back in a few hours. It'll be there. Remember Roger's letter? He's not upset anymore. He's calm. Why? Because he knows every day there's going to be a low and there's going to be a high. That's why this will never fail. Never. There's going to be a high, there's going to be a low sometime during the course of the day. Can they try to trick us a little bit and change it? Yeah. But do you think this little group of us 302 people in this room are going to make a dent on the $4 trillion market? No, not yet, we're not. So this will be good for a while. Okay. A hold the Mayo trade. We're getting through the trades now. We're almost done. I know I'm running long. A lot of you are tired. You want to take a 5-minute break or just keep going? How about I go through the trades and then we do a 5? All right. Hold the Mayo trade. The pattern, M or W, forms right on the white 200 EMA, 1 hour support. Remember, the white line, the mayonnaise, is the 1 hour 50 imported into the 15-minute chart. Pins are seen as if to create a false crossover. On the 5-minute chart, people think that's the crossover. They'll sell above or below the 200. The patterns are exactly the same as we've discussed. It's very easy to spot these trades for everybody. If you can't see a big fat white line running across your chart with a W on it, I failed you and you failed this class, all right? Tell me your address, I'm going to mail you a bad report card. That's what it looks like. 3 hits to the mayonnaise. Right out, boom, boom, boom. It happens to be the high railroad tracks. They pull right off the mayonnaise. Think about what they did here. Think about what they did. They closed above the mayonnaise. They actually got the breakout traders and the 200 EMA traders at the same time. Man, those guys are having a bad day. They quickly pull away and consolidate to build the positions. And then it's off to the races the wrong way. There it is again. It just missed the mayonnaise. It rattled around between the water and the mayonnaise. Look at that spike to the high right after. 118 pips, and then it just took off. It was gone. This is holding the Mayo. Peak formation was low here. I believe this was Australian a couple days ago. Again, hold the Mayo. It comes right out of the red box, hits the mayonnaise, and just slowly trickles all the way back into the range. Coordinate that. This is 46 pips right here. The whole trade was about 60, 70 pips. Coordinate that with the stop hunt coming out of London Open if you catch this high late in the day. Stop, hunt, trap, move to stop, hunt, trap, move. Minimum of 100 pips. Why? They hit the stops 50 over here and 50 over here. That's 100. Plus the run in between. Okay, here's a beautiful one. This one I showed you from the other slide. They worked on the mayonnaise for all night. Think about what they were doing. Hit them, trap them, hit them, trap them, hit them, trap them. Each subsequent wave is subsequently higher, so the previous group of traders can't get out. Right? When they make this pass, these guys are still stuck. When they make this pass, these guys and these guys are stuck. When they make this pass, 1, 2, 3 groups of traders are stuck. Add the spread in there and they're all down. Then what happens? Sorry about your luck, fellas. They take it off the other way. Okay? These charts are all 15-minute. This is the 60-minute 50 EMA imported in onto the 15-minute chart. I know what's happening on the 1 hour chart without even looking at it. It's imported. Okay, understand? Okay, is that the break? All right. Last thing we're going to do, we're going to take a quiz, and then we'll go to questions, okay? Get out a piece of paper, number 1 to 10. The guys that took this already, don't cheat. Close your eyes or something. All right, number 1 to 10. Tell me the entries. There's more than 10. Tell me all of them. All right, I'm going to put this down for 4 minutes and come right back. Write down the entries. I'll go over them. Okay, good. Sorry. All right. Here's the entries. M or W. 513 crossover confirm. It's a little late. I want you in sooner. But if you must, there it is. Pins and spikes. Right? Railroad tracks. Pivot level holds or rejects. The M1 level holds with the pattern. 50-50 bounce. Goes right down to the 50 EMA and holds. 200 bounce, right to the mayonnaise. 3-level rise or drop. If you see 3 levels of rise or drop, that's an entry. It starts setting up with the other things coming together. The ADR high-low is met or exceeded. Shark fin, absolutely. Blood in the water, half a Batman. Divergence at the right segment of the market. Stop hunt, the hourly close. Those are entries and confirmations of entries. Okay. You know where to get in. Where do you get out? Tell me the exit. Okay, this one's faster. You should know this, because you just wrote the first set, right? Some of them repeat, don't they? Okay, let's see. Duh, if the M's the entry, the W's the exit. The 513 crossing back the other way. Pins and spikes, right? Pins to the top, pins to the bottom. That's the other side of the trade. Railroad tracks. Pivot level rejection again, right? Sister pivot. If the M1's the entry, the M3's the exit. Again, if the bounce shows up on the trade, if it hits the 200, a quarter wood, extended consolidation. Quarter wood's a consolidation. Think about lumber stacked sideways. Trade goes back into consolidation. That is an exit. You catch the low of the day, U.S. session reversal, back into the range, it goes sideways, get out. Half a Batman, yes. ADR high-low. How about this? Take profit. You hit your 50, you're done. 3-level extension or 3-level correction, yes. 2-hour time constraint, a good one for all of you that got jammed up on that trade last night. 2-hour time constraint. End of the week Friday, yes. TDI cross back in. The other side shark fin. News is approaching. Yes, these are the right answers. Okay, hopefully you guys are getting it, because we're out of time. All right, here's the quiz. I'm not going to wait for you guys to write an essay. I'm only going to give you a few minutes. Explain to me, quarter wood is sideways consolidation or quarter wood. Okay, explain to me the 24-hour market cycle. 5 minutes. Write it down. Write me a little essay. There is a cycle from 5 p.m. to 5 p.m. Tell me what it is. Very important. This is the entire foundation upon which this whole class is based. If you can't write this essay, you better watch the videos. Okay, I'm back. I know you guys are getting tired and I'm going long. Sorry. Okay. Somebody put it very simple. Consolidation, grab the stops, 3 levels up, 3 levels down, pins at the down sound. Okay. What I was looking for, a little more detail than that. Asian range, high-low resets at 5 o'clock. Initial high, initial low, blah, blah, blah. All right? They come out of the box and 3 swipes at the high or low. They hit the stops one more time, form out the W. Peak formation, high or low intraday. 3 levels of rise, 3 levels of correction, that kind of stuff. That's what I'm looking for. The entire market cycle. Okay, notice in this picture, it's kind of cool. They hit the stops one more time. And look at the big fat W in RSI. They went into consolidation. They triggered it one more time before they made their reversal. That is your sign when that happens to go long. Okay, when they throw the stop hunt one more time after they make the run down, they spike it one more time, that's the reversal signal. Your entry is right there after the green close. Okay? I hope you guys got this. I hope you enjoyed the class. All right, here's an exercise for you, another one for your homework. Put it all together. Find the stop hunts, M's, W's, trend runs, New York City reversals, hold the Mayo, shark fin long or short on the pair assigned to you. How about you do it over the holidays for all 4 majors? Or how about just 4 pairs in general? Pick whatever you like. I'm not going to restrict you because some people, you might hate doing the homework on a pair you hate. Pick something you like and go back and identify this. Do a markup on the chart. When I come back, January 4th, I think it is, we'll look at them. Okay? I promise you the market is still going to be there. If you take some time off from trading and go back and do the homework, I promise you the Forex market will be there on January 15th when it's time to start trading again. You're not going to miss anything by taking some time off and doing some homework. Ray is very successful. He took off 3 weeks after my class. Okay? He took 3 weeks off because he went back, counted the levels, and did this exact assignment. And then he learned something. He said, man, it's the same crap every single day. That's all they got. Hit the stops, reverse, hit the stops, reverse. That's all they got. When he was able to identify that, everything changed for him. He scales in 216 times on a 50-pip run and goes back to bed. He is killing it. Adam Ford, another one. Okay? Took the time to learn the business, do the homework, and mark the charts. He is now successful. Simple. The people that haven't done any homework and are struggling, guess what? They're whining the most too, that they don't get it. I'm not calling anybody a whiner, but if you haven't sent me one homework assignment and you're struggling, is that on my tab or yours? I'm telling you what to do to be successful. I'm telling you how to be successful. Success starts by you rolling up your sleeves and doing a little bit of work. I'm telling you that if you do a little bit of work, that there is $50 million per pip waiting for you to grab off of there. Just simply do it. You also have the advantage of the recordings, something that none of us had before. Just do it. Just go. Just make up your mind. Start a new year. Remember I told you? Just make up your mind. You're going to do it. For 2011, we're going to break the brokers. All right? That's it. That's all you got to do. Okay. The end of the slideshow. I have one more slideshow. I'm going to take questions. This is, I call it the wrap-up show. Some of you that listen to satellite radio know what I'm talking about. Okay, it's called Where Do I Go From Here? If you feel like this guy, hey, I'm not projecting. There we go. If you feel like this guy, you are not alone. Okay? What do I do now, Steve? I got all this information. I'm lost. I feel like this guy. I'm confused. What am I supposed to do? Okay. Number one, most of you already have this handled, but it's very important. If you cannot master the platform, you will never be a master trader. It's that simple. If you're fumbling with the scripts and you can't execute and you can't move your stops and you can't set a take profit, how the hell are you going to trade? So I want you to get out of here, open a couple of demos. They're free. Practice your order entry, your stop loss placement, learn the icons, learn what the profiles mean, practice drawing on the chart. Use all the scripts and scalar I provided for you. Thank you, Ray. Practice placing your pending scaling orders, your stop losses, your adjustments, all the stuff that I talked about. Don't forget to put a fresh template on after Heidi Close All. You guys don't know, but Heidi Klozol, when Heidi was learning how to trade in the business, the Heidi Klozol was created. Why? Because when we were scaling in and we were up big, she'd go, hurry up, get out. Hurry up, you better get out, man. That looks good. Hurry up, get out. Hurry up, get out. She didn't understand the business yet. So her excitement of yelling at me to get out forced me to get someone to write a script where you drop it on the chart and it crushes the scale-in cycle immediately and takes everything off the trade. It's actually kind of cute, and I named it after her, and she's kind of flattered that I use it still. But anyway, it was never meant for public use, but it turned out that I decided to teach, and there it is. Okay, so now, I said this already one more time. If you cannot master this platform, MT4, or whatever dealer you're using, I think FX Solutions now has MT4, but their platform's a little different. How are you going to master the business if you can't use the tools? That's like not being able to type at a job where you make typing documents. Build all the charts and profiles on your home PC and your laptop. Why do I need to do my laptop, Steve? I don't even use it to trade. What if your shit goes down and your power goes out? I live in Florida, the lightning capital of the world. Guess what happens? We get power fluctuations all the time. Sometimes battery backup is not enough. Set up all your templates. Become familiar with all the indicators that we used in here. Make copies of the checklist that I gave you. I know they're not in there. You will have them. The easier thing to do is to memorize that checklist and then ball it up because it's in your brain. Okay. Adjust or complete your trade plan. I hate trade plans. They're BS. All right? But I'm telling you in here, the trade plan for us is a checklist of rules and rules only. It's not like, oh, I was sitting by the window and the grass was green and a bird flew by and I took a trade. That is crap. And that is what people sell in the industry. That's not what I mean as a trade plan. What I mean is I'm taking second leg M's at the mayonnaise only for the rest of my natural born life, and I'm going to get out with 50 pips. That's a plan. I'm going to scan every day from the last quarter of the blue box to mid-session for W's and M's in line with the peak, and that's it. That's all. That's my rules. That's what I want you to do. Set a foundation, a set, so to speak, of what you're taking and nothing else. Because then when something that you're not sure of approaches or shows on the chart, there's no discretion. That goes against the rules that I applied for myself. I ain't taking it. It's shit. I ain't taking it. I want you to be realistic. Don't make a plan that's impossible to stick to. I met some people that were sitting in front of their screen 18 hours a day. That is absolutely out of the question. That is not why you became a trader. You became a trader for time, freedom, and leverage. Work a couple hours per session and then break. I told you the moves commence in the first part of the sessions, right? They start with the trap and end with the trap. So guess what? The setups are at the beginning of the sessions. So make yourself available the end of the Asian, first part of London, end of the London, first part of US. And then kill yourself the rest of the day. Get out of there. I mean, don't kill yourself. Okay, very important. Find a trade partner. If you're lost, get a partner. Someone to compare notes with. Now, I know there's a lot of groups developing. I know there's one in New York. I know there's one in California. There's one in Vegas. I can go on and on. They're in Minnesota. I don't really care for these groups that much. And I'm not being mean to anybody, but here's the deal. The groups slow you down. You trade down to the lowest common denominator. And I don't mean any disrespect to anybody. That's not what I'm saying. But if you're a sharp guy and you get this, you end up teaching to the rest of the group. How the hell are you going to trade? You have no business teaching my method if this is the first time you've ever heard it. And if you're not a master at it, you shouldn't be teaching it. Okay? So if you're going to trade in groups, keep them small. Don't let them slow you down. You need to become a master at this before you can teach anybody. You know how they learn? Take my class again. Watch the tapes. That's how you learn. You're not authorized to teach this to somebody else until you send me a chart with 5 million take profits lit up. Okay? And I'm not trying to be mean. I'm trying to tell you that a lot of gurus are popping up, and people are emailing me saying that they're confused even more now because someone taught them what they thought the 3-level rise was, and they can't see it at all now. That's what I want to avoid. If your head's spinning, that was my intent here. To totally strip you away of all this stuff and garbage that you've been taught by other people. Now, until you find someone that has mastered this method, there are some people out there qualified to teach this. And I'm going to say his name. He's going to, I'm going to say it, Ray. Ray can teach you this stuff. He is a master. I don't want to say other people's names because I know you're going to bombard them. But anyway, nevertheless, I see some people trying to meet up in different parts of the world. Absolutely, I recommend that. You know what's even better? Sit at home in real time on your own. But maybe meet for a cup of coffee on Friday after the markets close or Saturday and compare notes. Sorry, Ray. You are a great trader, though, and I'm proud to have you part of my group, man. You've helped a lot of people along the way, and I think that's part of paying it forward. Thank you. Okay, anyway, keep the group small. They'll slow you down because you always trade down to the lowest common denominator. I know you want to help people and you're excited, but you got to master this stuff here first before you get out there and start sharing it with everybody. And don't forget about your non-disclosure, too, by the way. I appreciate that. Okay. Practice, practice, practice. Steve, I don't understand. I can't get good. Have you sent me any homework? Have you went through the charts and actually did it? No. A lot of people that are complaining, that are struggling, have not sent me the homework. You have no idea how that frustrates me. I am handing you the keys to the city. Go home and do the homework. Drill the charts, the high-low drill. I didn't mention this. I'll mention it now. When I was learning the business, I did a high-low drill. I used to get in front of the high or the low when it was forming and try to get it within the pip, nail it. And what my report looked like was -5, -5, -5, plus 125. Until you get used to stepping in front of the high or low, this is demo, by the way. Until you get used to stepping in front of the high-low and pulling the trigger, maybe with hotkeys or scripts, whatever you like, you're not going to master it. You're going to sit there and you're going to be floundering and you're going to blame me. And that is not on my tab if you don't do the homework. Scroll back in history and mark those charts up. Practice in real time. People have offered me these demo things, these things that run. I've played around with them. I think they suck, to be polite about it. This stuff messes up your timing for when you're watching charts in real time because they're slower than the way these screens scroll. Okay? That messes you up in real time. And then here's something for a lot of you guys. Don't go live until you doubled your demo. For some of you guys in here, I think that's tomorrow afternoon around 5:30. A lot of you have doubled your demo in 3 and 4 days. Absolutely phenomenal. I commend you guys. Okay, but here is the theory. My parents taught me this, and I didn't get it until my mid-30s. Some of you said comments about my mother. Thank you. My father, they're both gone. They did get to see me have success as a trader, and I'm forever grateful for that. My mother just got to see my son before she passed in the summer. Give me a fish I can eat for a day. Teach me to fish and you can eat for a lifetime. I am here to train you as fishermen. I do not want to hand you fish off of the street fish market. I am trying to teach you how to fish for yourself. When you get in these collective groups, you're giving them a fish. That's why I don't like trade rooms. Because people sit there and wait for and hang on every word of the trader and never learn this business for themselves. I am trying to teach you to fish for the rest of your life. A final thought. Good luck and good trading to you guys. If there's anything I can do to help, Judith, I know you're going to tell me the slide's messed up. I just realized it. My email address is steve@mmmforex.com. If you're having success, I want to hear about it. Send me your statements, man. You're going to be in my slideshow. And guess what? If you're not having success, I'm equally interested because I want to know what happened to you, why you didn't get this, and I want to help you. Do not be ashamed to ask me or someone in this group for help. Get to another class. By the way, it needs to be one of mine. Okay? And one more thing. I said this earlier. I need to say it one more time because it's important. You will not find comfort and solace outside of this group of traders, of this 325 people that are in here. Why? Because people are going to think you have smoked a crack bong before you tell them that you made 1,000% in 3 days. They are not going to believe that it's possible. So if you go talk to them and ask them for help, they are of no help to you. You need to find support at Compass through my team and through others in this group and in this room. And I explained to you what I mean by support. I don't mean them saying, there's a W, take it. Go over some charts together over a cup of coffee at Barnes & Noble. Go over some other stuff. Don't make them call the trades for you in real time. You will never master this. Okay, Lou, you're asking me for the support in New York. It is Carr. He is on here. Carr, if you want the emails, post your email address for these guys. Okay, that is all I have. We went long, I understand. Let's take a 5-minute bathroom break, and then I will take questions for as long as I need to take questions. Thank all of you. I see the thank yous pouring in. Thank you, thank you, thank you back. The best way to thank me is to break the broker. That's how you do it. Okay? I'm going to break. Thanks. I did it in half yesterday and it still was no good. Okay, so let's go to about, I don't know, how about let's go to the Fs. Fred's the last guy that's allowed to ask a question. Okay? Go slow. Pop a couple questions up there if you're from A to F. Fred's the last guy on that list. I see all the accolades and thanks passing by, and I'm telling you, it's absolutely heartwarming. Thank you, guys. Okay. Thank you, Anna. All right, not too many questions. I think a lot of those people are my... Okay, there's a good one. At what point do we scale in? Ray scales in every 5 pips. The scripts are set for 10. It is a personal choice. He wants to get his orders in as close to the high or low as possible with a little breathing room in case he is wrong. Okay, so I cannot pick the scale spacing for you. It is a personal choice. But the scripts are set up for 5 or 10. Okay. Good question. How do we check down to find the best pair? I thought I covered that, but here we go. You are looking for what level the pairs are at and how they are behaving for your setup. If you find a pair that is at level 1 coming out of there and you know that it's possibly going to do the straightaway trade and you don't like that trade, then you kill that pair. Okay? You're looking for pairs that are not in the news. Releases, right? During that session you're about to trade. You're looking for pairs that are showing signs of level 3 reversal or level 1 peak formation, right? That's what you're looking for. A sucker trades in the middle. So you're looking for stuff that's forming the M or W that has the 1 hour and 4 hour in confirmation. That's it. Simple. When those pairs show that, those are the ones you trade. You can trade crazy pairs like USD, Turkish Lira, there's W's in there. It's crazy. This is in every single pair, almost every single day. Just variations on the theme. If you don't believe me, go through them. Good homework for you. Are the scale-ins the same as the first entry? Yes. Stop loss the same as the first entry? Yes, initially. Then as you move through the aggregate, you must pull the stop loss up, and it is the same on the orders behind the stop loss. Okay, so if you have your 5 order fired and your 4 order fired, and then your 3 order fired, you have separation, your stop loss goes between the 3 and the 4. It is the same for the 5 and the 4. Okay? I would like for all of you to try to use the scripts before we come in on the fourth. That's what demo's for. Drag them all on there, play with them, get a feel for them. That's what I just said on my slideshow. Play with the stuff on the platform, get used to using it. Okay? All right. The next batch of traders. Okay, one more good one actually. How do you handle if there's a third or fourth leg on the M or W, especially if you entered on leg 2? Okay, first of all, the 2-hour time horizon is it. They might hold that level and chop. We have no way of knowing how long that will go. So if the 2-hour time horizon expires, scratch the trade. Okay? If you see the third leg appear and it doesn't take out the first and second leg, you can stay with the trade, start the timer over. But the third leg is not that often. I want you to understand that. As long as the high or low is not breached, the trade is still valid. Okay? A lot of the stuff that's being asked is stuff that will be answered in the homework, I promise. I promise. Go back, listen to these tapes again and the homework. Okay, with a half a Batman to the upside, how do I know there won't be another spike up? Nobody ever knows for sure, really. That's why second leg M or W is the best trade there is. But when you start playing with the charts, you will see when the half a Batman presents how it sets up. It's more, the spike or the outside bar to the lower high is further, deeper. You'll see it in the charts. Do I mean 2 hours of consolidation and scratch it? No. When the second leg is formed, you start your time horizon for 2 hours. Start the clock. When you see that hammer or the second leg form out and you see the entry, you start the clock. If that trade doesn't move into profit in 2 hours, didn't we see Roger say a letter that his trade went into profit in about 10 seconds? That's what I'm talking about. If you're in something that's floundering around for 2 hours and not moving, when everyone else's trade goes into profit in minutes, something's wrong. Take the scratch on it. Okay, someone's asking what a half a Batman is. All right, if you don't know what a half a Batman is, you're late to the party. I'll draw it for you, but guess what? This is something that can be viewed in the tapes. Okay, let me draw it for you real quick. Half a Batman is simply what it sounds like. It is half of the guy's head. Okay, isn't that kind of like a half a Batman look? Picture, right? Full Batman? Alright, half a Batman is a spike to the high that rolls over. Kind of looks like the straightaway also, okay? Hildy, you know what? Go to the chart, you find me one, and I want you to email it to me. How about that? I showed pictures of it, they're in the slides. Now you got homework. Okay, one homework assignment. Hildy, mail me half a Batman. Okay, the next part of the group is going to be from Garland down to, how about, we'll stop at Russ Hartman. Okay, between those two guys can ask me questions now. Go ahead. Okay, Joe said never trade against the 1 hour chart. That's the question. Yes, Joe. What do I mean? Remember, you're looking for the closes in the pattern on the 1 hour chart to confirm what you believe you are seeing. The 1 hour chart is very solid. Why? It is far enough away from the action or far enough away from the noise to give you good signals, but close enough to the action to keep you in the trade, right? On the right side of the trade. So, the 1 hour chart is very powerful. If you get right out of the blue box, railroad tracks on the 1 hour to the downside, man, you're a buyer, right? Railroad tracks on the 1 hour is solid gold for the reversal signal. Remember they worked the area 30 to 90 minutes up to 2 hours? Well, if they work 2 hours, that's one candle in, one candle out. That's a reversal. Take it. Okay, someone wants to know the half of Batman entry. The half of Batman entry is anywhere in the consolidation zone. Yes. Lou, I think you've been killing it. You can kill the foot soldier. The question was, do you start right away with a foot soldier or do you want to kill him and go big? It's up to everybody where they are in the journey. I know for a fact that some of the people in this group, and in fact a lot of them, are absolutely killing it. I'm telling you to kill the foot soldier if you're doing that well and go 5, 4, 3, 2, 1, or just go 10 or 20, whatever you're comfortable with in your account size. I'm talking demo now. Make sure that you're comfortable with everything. Demo. Practice the lot sizes you think you're going to be using with the balance that you will in fact be using. Don't open up $1 million demo unless you got $1 million. If you got 25 grand, your demo's 25 grand. Pick the leverage and the lot sizes that work for you until you are comfortable and understanding that you don't get yourself in margin trouble and take multiple trades. That's what you need to do. That's the first step. Okay, when that account is doubling, like someone did it in one day, I guess you're ready to go live. I'd like to see you do it a few more days in a row. Give yourself about a month. This is a rough time of year to be trading. You know, just as soon as I say that, tonight will be the best M or W you've ever seen in your life. But for real, typically, historically, you don't get good setups for the rest of the year. Okay, another comment, not a question, that this was one of the best Christmas presents ever received. Thank you. Is there a minimum size for candles that make up railroad tracks? No, not really, but when you see them and go through the homework, you'll see what I mean. I don't want two little tiny candles next to each other. They need to be stretched out, and one of those candles usually makes the low or high of the day. The first candle usually makes that. What constitutes good follow-through? Good question, Lou. How about 175 pip, 3-level rise or 3-level drop? That's a follow-through. If the market's chopping around between the high and low, there's not much going on, it's over. Okay, Ian has a question. Is it good to place a pending order near the higher low for second leg? No. Because you don't know if that's the second leg yet. That's John Weiser stuff because he wants to go to bed. He doesn't want to stay up. No offense, John. That's not what I'm talking about. You need to be there for the formation to occur. Okay? Okay, some thank yous in there. Good, good, okay. All right. I implore all of you to watch the charts again. I'll watch the tapes again, I mean. Okay? The last batch of guys you can ask. Can you get me to not teach this to anyone else? Eventually that'll happen. The more and more my son misses me when I'm traveling, and the more he realizes when I'm out of the room that I'm gone, that's going to become more probable. Someone asked me if the market makers are more powerful than all the retail traders combined. The answer is absolutely yes. Thank you, Lou. Lou said he can't thank me enough for everything. I can't thank you guys enough for everything. Thank you. All right, Carr put up his email. It's carrychen@hotmail.com. That is spelled Karrychen @hotmail.com. They meet once a month in the greater New York area just to see how people are doing. Him and Scott run that up there. New York, New Jersey people, that area, okay? They got a pretty good group up there, man. New York's crazy up there. I love it. And I think they eat cheesecake and cannolis at those meetings. I'm kidding. Oh, it's underscore, sorry. It's Carr underscore ychen @hotmail.com. Is that right, Carr? When does the market maker weekly and daily cycle begin? Is it Friday at 5 p.m.? No. It's hard to see where he left off. The only way to see where he left off is to count backwards, try to identify level 3, and then start counting from there. Okay? Okay, it's Carr underscore Y underscore Chen @hotmail.com. Let me see. If you guys stop for a second, I'll copy and paste it. because I know you guys can't see. Hold on, don't move. Don't move, you moved. All right, I got it. All right, Carl, I'm putting it up. Hope you don't mind. Okay, John's telling me that he finally got used to staying up through 5 a.m. Eastern, and he's up 456 pips this month, so I can't make fun of him anymore. Good job, John. Is there a group in the Pacific Northwest? I don't think so. I know that LA has a pretty good group, and that's headed up by David Pack and Deb Donahoe. Sorry, I didn't mean to throw that out there on you guys. Okay, what I think is a good idea is, if this is okay with Kim, the people that have the groups email Kim at compassfx.com, if I got that right, and she can send out the greater group meetings. Okay, I know a lot of you guys want to get together like AA and hang out and talk about stuff, but again, do this when the market is closed. Do not do this in real time. This will keep you from learning the method. Someone asked if I'm going to Toronto. Right now, all I care about is going to Aspen, buddy. I don't know yet. If you see a guy wearing the money bag gear, you ever see that Gene Simmons clothing line, the ski gear with money bags all over it? That's me. Say hi. You know what? I want to come to London. Someone asked, will I ever come to London? Can you get 3 levels of rise and fall within 2 days? Absolutely. Look at the example I posted when the news came out. They used the news to complete the pattern a day early. That's okay. When will I come to Dubai again? You know, I don't know. I love Dubai. I love the little indoor ski resort. I love the mall. Everyone was very kind to me over there. It's possible. Maybe for next year. I don't know. Let me just leave you with this. Orlando is the only thing I have that's definite. The website will be updated. Right now, all I have is Orlando and maybe California and Toronto. Everything else is up in the air right now. I don't know. I just don't know, okay? As soon as I know, you guys will know. Lou, where are you? Lou wants to know if I'll go up there. I don't know where he is. New York. There's a huge group up in New York, Lou. I got a huge following over there. I single-handedly closed down a franchise up there. I don't want to say the name of it, but that's what happened. I got family in Shinnecock. Okay, we're just bantering now. I didn't mean to be an answer to your prayers, but if I was, thank you. Yeah, I like Hawaii. That would be great. Okay, here's the deal. I answered a lot of questions, but a lot of these questions, the answers are in the tapes. Okay? I want all of you to go back and promise me that you're going to watch this class at least one more time, please. If the recordings are messed up, I don't care. Close your eyes and listen. Make your own notes. Turn your screen off and just listen. I can't help the technical stuff on their end. All I can tell you is that the material is all there. The same exact class is there. Okay, Asubio is asking if anyone else is in France. He's over there. I know, that's a good time to trade too. The hours are right. Anyone in France, contact Asubio. Okay, one more time. Anyone that has a group or is looking to start up a group, send the information to Kim and we will post it somehow. I don't know how, maybe in January. We'll figure something out so we can support each other, okay? We'll get this stuff all worked out. I really enjoyed being here. I hope you enjoyed it as much as I enjoyed teaching it. I told you earlier, and I meant every word of it, that something is going on here bigger than all of us. It's amazing to see the kind of money that people are knocking down. Okay, Asubio put his pips up. I'm going to repeat them. Wednesday, 2,048 pips. Thursday, 636 pips. Friday, 1,642 pips for a total week of 4,326 pips. A 202% increase in his account in 3 days. If that doesn't convince you that I'm not a lunatic, nothing will. Okay, guys. It's over. If I had the music, I'd play the violins or whatever. I'm going to get out of here. I'm leaving tomorrow. I got to finish packing and get out of here, okay? I really appreciate all of it. Give me a couple of days. Give me some time till after Christmas to get back and look at email, all right? I'm going to go dark for a few days. I didn't forget about you guys. I just want to clear my head and enjoy my time with my family, okay? I thank all of you for being here. I thank Compass for inviting me. And I look forward to seeing all of you on the other side after the holiday. Good night.